Hello, everybody. My name is Nicole and I'm a technical analyst and private investor. And today I wanted to comment about this month, February 2021, in that it is a perfectly rectangular month. That is, we kicked off Monday, the 1st of February, and we will end on Sunday, the 28th of February, which means that you've got a rectangle, which is 4 weeks high and 7 days across. And it doesn't happen very often. It last happened in 2010 and will happen again in 2027 for all of those who like numbers. But what's really happened is that over the last 3 weeks, number of different markets, not all of them, but they have suddenly taken a sort of skittish spurt for the good if you're on the right side of it. I don't know. Who knows? We'll see. But certainly the volatility and the moves have been outside of the boring thing that we got used to over the last 6 months. And so I thought I'd look at the pound today. And my first chart is cable. And that's how many dollars do you need to buy a pound. This is a weekly chart. And you can see that from $1.50 to the pound at the beginning of last year, a year ago, it's done nothing but rally at a 45-degree angle, and there we are. Do you remember all those people that were calling for parity? I'm dying to know what they're saying now. But basically, from this rather complicated chart of mine, we've broken through all sorts of long-term downtrends, those diagonal lines going from left to right. We've broken above them all this year quite clearly. And it's just steady as she goes, really. This is not terribly exciting. The only exciting thing I'd say that has happened recently is that we've now got a 1.4 handle onto this little beastie, rather than 1.1 or 1.2 or 1.3 that we've got used to. I mean, I'm still on track to get to my first target at just under 1.44, but then I think we'll move on to 1.5, a new handle to deal with. And this is merely the halfway point between the high of 2014 and the low we hit in 2020. I think we're going to stall there again. What's really extraordinary in this currency pair is that still, even today, a put on the pound, an option to sell the pound against the dollar, is more expensive than a call on the pound. I mean, this has been the case since at least 2008. I mean, I've got to say, I think this must be the most hated currency pair in the world. So let's look at it from a different angle. So I'm going to switch to my second chart, which is the pound against the euro. Now, this is a very long-term monthly chart going back to, as I say, 2008, since when puts on the pound have always been more expensive than calls on the pound against the dollar. Here we're looking at against the euro, and you can see that for much of the decade plus since the great financial crash, the pound has been trading at about 84 pence to 94 pence per euro. And when it's never been to parity. That's the important thing, never been to parity. It looks as if it's going to drift lower to the watershed level at 82 pence. And my third and final chart is the Bank of England's trade-weighted sterling. And this is a chart going back to pre-financial crisis. And you can see that today we are trading at some of the strongest levels since the referendum. It's still cheap. The pound is still cheap by 21st century standards. Take that on board. Good luck and see you next week.